Good morning, ladies and gentlemen. Yeah, you're welcome to another episode of Outbound Team Mental Fitness. And I'll be your facilitator today. Olusegun Adebuso is my name. So today I'll be sharing with us on the topic decision making in financial investment. So listening to that, you'll be thinking or wondering now, what kind of a decision do I need to make when it comes to financial investment? It is not something you can just wake up in the morning and you believe, let me just invest my money. So you cannot just put your money inside a WC and then you flush it down the drain. So that is more reason why we are here. So before I dive straight into the topic, let's quickly move to Outbound, our company's vision and mission statement, and also the core values. So the next slide we have the vision statement, which is to be the foremost agro-to-home project development company, securing future space to promote unity in Nigeria to the world. And as well, the mission statement, engaging professionals in order to deliver wealth creation through the secure space in bond agricultural practice and home hospitality development project. Then to our core values, we all know ITIED, we call it ITIDE, innovation, trustworthiness, integrity, excellent execution, and delivery. So back to our topic, which is decision making in financial investment. Let me come in with this starting quote by Jeremiah Say, which says that investment is a journey of self-discovery. It reveals your relationship with money, your tolerance for risk, and your ability to stay disciplined in the face of uncertainty. You need to discover yourself first. What do you mean by discovering yourself? You know the kind of personality you are. Are you a kind of personality who is ready to part way with money? Because if you cannot part way with money, there's no way you invest to. It's just like you sacrificing. So you need to discover yourself, which reveals your relationship with money, your tolerance to risk. There are risks attached to every investment, be it financial or what have you. And your ability to stay disciplined, in the face of uncertainty. Investment, you don't know what the future of such investment holds. So you're just putting your money there. It's just like a risk. You don't know if it holds the prospect of a gain, if it holds the prospect of a loss or a break even. So let's quickly move to the next slide, which is financial investment. What do we mean by financial investment? A financial investment is an asset that you put money into with the hope that it will grow or appreciate into a larger sum of money. A few of most common types of financial investments are real estate, stocks, exchange traded funds, ETFs, bonds, which pays you interest to the owners. We have other ones like treasury bills. We have treasury certificates as well. But I just need to limit, to what we have here. So you have various types. Financial investment is an asset whereby you put your money and you sit back and watch, let your money grow for you. So you can't walk your way to success. You can only invest your way to success. So you can't just walk till you die. Put your money somewhere, sleep. By the time you wake up in the morning, get something good. That is the essence of investment. You are putting your money and you want a ripple effect for such to give you what? Increase or appreciation in value over time. So now the question is investment an asset? That's another thing. The next slide. Is investment an asset? All investments are assets. They are assets. They are your properties. But not all assets are investment. Why? How do we mean? Now, assets are acquired and owned. Assets, properties, you buy them, you own them. But when it comes to investment, you don't buy them, you make them, and you own them. You don't buy investment because investment, they are intangible. You can't see them. Asset, you can see them, like your vehicles, motor vehicles, like your furniture fittings, your land. Those ones you can buy because they are tangible. But intangible, the assets like investment, you don't see them. So that is the difference between the two. So all assets, all investment, they are assets, but not all assets are investment. And the intention of the investment is what I said initially, appreciation of value over time. And to the next slide. Now let's look at investment decision. Investment decision, influenced, by investment objectives, returns, frequency of returns, associated risk, maturity period, tax benefits, and inflations. There are some factors that actually influences your decision making when it comes to financial investment. Before you invest, sit down, make necessary researches. Don't just put your money because somebody told you that, oh, this business is going on now, let me quickly wire my money, my hand-earned money there. No, it doesn't work like that. Make your researches very, very well. Just like these factors we want to be looking at, it will give you more insight on what you actually put your money. Okay, the first thing we have here is, the next slide, is investment objective. What is the essence of you going into investment? That's number one thing. If you don't need to put your money to invest, you don't need it. What are my aims and objectives? What am I aiming at? What am I looking forward to get? So this is the number one thing, which is the starting point of decision making. Your purpose of investment. You need to sit down, define that first. Or perhaps, I want to buy a Lamborghini, I want to buy a Prado Jeep, I want to buy the latest Mercedes Benz. Okay, let me invest. Then let me see if it's a long-term investment or a short-term investment. I know it will give me my return on investment. I'll be able to buy that, because I can't save up my salary to buy that. It will take a longer period of time. So that is the number one thing. You need to define your objective. Then number two, the next slide is risk assessment. Then also you need to assess the risk involved with that particular investment you've actually chosen to put your money. You need to consider the risk involved. Weigh your potential gain against the possible losses. Don't think by the time you put your money there, it will give you ripple effect without risk attached. No. I don't know how many of us listen to a podcast by Pastor Matthew Ashimolowo. He said something that he invested into shares, 200 million naira some years back, and he later sold 30 million naira. That's a huge loss. 200 million naira and later sold 30 million naira. That is 170 or roughly 170 million losses on shares with Nigerian banks. He stated. So don't think when you put your money there, you need to assess that risk. Sit down, understand what you are putting your money into, because this will guide you in making your financial decision making. And to the next slide, another thing you need to consider is the investment period. The period we're talking about the duration, the length of time of investment, which can influence the return on investment. We have short-term period, which is within the range of a year, 12 months. You can do long-term, which is more than 1 month, 2 years, 5 years, 10 years, 15, 20 years. On the part of real estate, you can't say you want to do short-term. You're not getting anything. That's just it. Real estate is something that is actually a business that is real. Real estate is a business that is real. If you want to get ripple effect, you allow it to grow for a longer period of time. Meaning you are not subscribing for a short-term period. You should go for a long-term period of of investment. Am I communicating? So let's move to the next slide, which is liquidity. This is another factor which influences, our decision making. When you're talking about liquidity, you're talking about cash. Cash. Cash is considered as liquid asset because it can be easily accessed and used to buy almost everything. Liquidity therefore refers to how quickly and easily an investment can be converted to cash. How easily can such investment be converted to cash by the time you need money urgently? So whatever investment you are putting your money to, you need to also check about the liquidity aspect. Can I easily convert such into money when I need money urgently? And to the number 5, the next slide, taxation. This is another factor some of us we don't really understand, and it is very, very important to have full knowledge of taxation in Nigeria. We know that part of the fiscal policy of the company, we have monetary policy, we have fiscal policy. This is a tool, fiscal policy, the government used to regulate the revenue and expenditure of the country, as we are in Nigeria now. So that is why the government imposed tax, as a compulsory levy on individuals, corporate bodies, on goods and services, so that they can get money. They generate revenue, and they do a lot. That's why you see them erecting buildings, giving you federal roads and the likes. So this is actually a tool the government used to regulate. So before you dive into any investment, you need to also consider some tax experts, some tax consultants, that okay, this business I'm going into, this investment, what about the taxation aspect on it? How much am I to pay? To corporate bodies, we pay CIT. That's the company income tax. To individuals, you pay your what do we call it? The personal income tax, PIT. You could for goods and services, you're talking about duties, excise, and what have you. So you need to consider, before you make an investment decision, it is important to consider the taxation rules and potential tax implications that may arise in the future. The reason is that different investment cause different taxation levels, which can affect your investment returns. By the time you pay more tax, it affects your investment returns. I think, how many of us have heard of withholding tax? Windfall tax. Though it's still an hypothesis in Nigeria. Windfall tax. You've not heard of that? Wow. The practice is in the, outside on the profit that you don't even plan to get, unplanned profit. When you have excess, perhaps a company plan to, or you project of having a profit of 15%, and at the end of the day you ended up having 25%. You're having more than your projection, so you are paying tax 50% of that money to the government. Though we don't practice that in this country yet, too. It's outside, but they are trying to bring it to Nigeria, on Nigerian banks, especially on exchanges. So you pay 50% on exchange transactions that you make. So they're still talking about it, be it 30%, 50%. So that's it. So taxation is one other factor you need to consider. So you need to understand the tax law, which helps you make sound investment decisions, which can help you protect your financial future. And to the next slide, number 6, is your financial analysis. Now, before making an investment decision, the financial health of a company or individual should be assessed. You need to check your financial capability. As an organization, check your statement of financial position. Are we financially buoyant? Are we financially okay? The investment you will dive into that will affect the company, you should not do that. That is a very wrong decision. And to you as an individual, the investment you want to dive into, which will affect you, you don't need to invest in such. You need to sit down and check your financial analysis. And to the next slide is inflation rate. The next slide is inflation rate. In financial management, investors look for investment opportunities where returns surpass the nation's inflation rate. Inflation rate in Nigeria now, at least we know what we are going on now, or what is happening in the country, what we are passing through. We know what inflation is now. Persistent increase in the price of commodities without a corresponding increase in output. So that's what we are experiencing now. The price of commodity keeps skyrocketing on a daily basis, and so to say, after the whatever protest, the number one boss came out. He said he gave us zero duty on local produced foods, importing our foods like our rice. But how does that affect petrol price? Because rice has actually reduced a bit. If I'm not, I stand to be corrected. Rice has actually reduced a bit, but the price of petrol keeps increasing on a daily basis. So technically, the price of commodities does not reduce, and it's not even coming down. Not until the government deal with the issue of petrol in the country. So now, before you invest, consider the inflation rate, because if you tie down your money and the rate of inflation exceed your own return, you know what will happen? It will affect the purchasing power, and once it affects the purchasing power, it will affect your own interest. It will affect your return on investment, because by the time you get something, you get peanut. You know, I say, what's the sense of me putting my money here? So those are the things we need to consider. What kind of investment can I put my money into that the inflation rate will not affect? Our inflation rate as of July is 33.4%, if I'm not mistaken. So we are still trying to get that of August. I was told 39.5. I know it has increased from 33.4 to something which we are not actually certain. So to the next slide, we need to consider asset allocation too. You know, asset allocation is the process of dividing one's investment among different asset classes such as real estate, stocks, bonds, and cash. By properly diversifying one's portfolio, an investor can reduce risk and increase return potential. It has been said severally here that you don't put your eggs into one basket. So that's the more reason why you need to divert your financial portfolio. Just make findings which ones are good for me to invest. Then you invest. But number one thing that I'm telling you is real estate. Real estate is a business that is real. It will never depreciate in value. Even after 20 years, you will get your ripple effect. That's number one that I know, that I'm still emphasizing on. So to the next slide, number 9, then also consider the calculation of your prospective return on investment. You need to know your return on investment as well. By the time you calculate, you get your return on investment, you know, okay, this investment is what is worth putting money into. If the return I'm getting back is nothing to write home about, it's a no-go area. So I can't put my money into buying shares that I can't leave for 10 years. If I buy shares, for now, one bank is selling 45 kobo per unit, 45 naira or 45 kobo per unit, something that I can't leave for 10 years. By the time I go back there after 10 years, it will drop back to 1 naira per unit, from 44 naira to 1 naira per unit. But real estate will never die. It will keep going up. So it can be in the form of interest, dividends, or capital appreciation, an increase in the value of assets. You need to calculate your return on investment. And another thing you need to know is the debt versus financing. Equity financing. Are you financing the business with debt or equity? You know what equity is? That is owner's share, owner's capital. So debt financing involves borrowing money from a lender such as a bank or financial institution. The lender will charge interest on the loan, and the borrower must repay the loan principal and interest over a set period of time. But equity financing involves selling a portion of ownership in the business to an investor. Do you want to use your money? Do you want to get loans to invest, or rather you want to make use of equity? Equity is just like selling parts of the shares of a company. Let's say, like I am in the company now, then we have various shareholders, and the company is looking for money. We need to expand the business. What do? Okay, let's say part of the share of the company to inside shareholders. By the time we collect your money to expand the business, we'll give you something in return, to which your shares will now increase. That is what it means. Or rather, you collect loan from the banks, to which you pay crazy interest rates. But I will advise you can use 70-30. 70 equity, 30% of loans. So let me give you this outgoing quote by Warren Buffett. It says that if you find a way to make money while you sleep, it says if you don't find a way to make money while you sleep, you will work until you die. In fact, when I saw this quote, I make research about this man. Is the number 10th richest man in the world. He's a business owner, CEO, a philanthropist, as old as he is. He says that if you don't find a way to make money while you sleep, you will work until you die. That is the essence of we allowing that money to work for us, instead of you working till old age. So I think that is what I have for you this morning. Thanks for listening. If you have any questions, any comments, suggestions, you can put on our YouTube channel. And here's where I'm going to drop my curtain and sign out. Thank you, and see you when I see you.